Hey everyone, welcome back to Theya. Today I'm here with Steve Barbour. He is the owner of Upstream Data, a Bitcoin mining infrastructure company. Steve, thanks so much for coming on.
Thanks for having me, Joe. Excited to be here. I like the block hawk you got in the background. What are we at? 66,000? Is that active or what?
Yeah, it's active. It updates every 5 minutes. The shortest interval that you're allowed to get it updated at, just so I always keep it
Okay, the price was a bit higher than I realized. That's good.
good for miners. Good for miners especially. And we'll get into it. We'll talk about hash price because that's I think the biggest story, and the biggest story that not a lot of people who are um, kind of adjacent to Bitcoin or distant from Bitcoin understand. And so I'm excited to get into all of that. But before we do, go ahead and talk a little bit about who you are and what you do over at Upstream Data.
Yeah, well, I'm the owner, president, CEO of Upstream Data. I've been running it. I couldn't believe it actually. It's our seventh year this year. We incorporated 7 years ago. So we are ancient, I guess, in the Bitcoin mining world. But yeah, we're an infrastructure business. We focus on mostly natural gas Bitcoin mining. So like associated gas, like venting and flaring, and we build systems for that. And we also build, call it container products, like what we call load centers for the grid as well, and
Excellent.
control systems. Yeah.
Yeah, I've been following what you've been doing for a while, and to me, it's extremely interesting. I want to talk about this particular tweet that you put out on April 30th, so a little while ago now. Obviously, a few weeks post halving, or not a few weeks, a few days post halving. You said that if Bitcoin's price corrects down for the short term, hash price is going to get murdered. Arguably, big
Yeah.
miners holding a big Bitcoin stack might liquidate a bunch to hedge their bets in the short term. So we didn't see that huge liquidation cascade, at least that I'm not aware of. But what is hash price, and how does it impact miners?
Yeah, I mean, hash price is like the I call it like the oil price of Bitcoin mining. It's really the commodity price because Bitcoin price could be $1 million that tomorrow. That doesn't mean Bitcoin mining is any better of an investment because if the hash price doesn't go up with the Bitcoin price, presumably, if the network difficulty went up alongside the Bitcoin price, then you'd still have a low hash price. And so the hash price is effectively the value of the compute. So when you're hashing, let's say you have an Antminer S21 and it's hashing at 200 terahash per second. The hash price is the value of those computations in dollar terms, or at least that's what most people use it as a reference rate for. So it's just sort of a reference rate for what the compute is worth, because of course when you mine Bitcoin, you get Bitcoins are generated by, the rate at which you're generating Bitcoins have to do with the difficulty, how many fees are in the block, and the overall network hash rate, well, which is the difficulty, but your own hash rate. So hash price is really just the commodity price for Bitcoin mining. I think, the hash price will basically like self-regulate. Like if are you able on this screen to even go back to the 5 year chart? Hit
Yeah,
that
let's do it.
5 year or all time. Yeah, and you'll see that like the hash price will generally trend down over time because the efficiency of the mining machines keeps going up. And so like even if the network doesn't grow and everyone just keeps replacing their machines, they'll be able to keep running at a lower and lower hash price because their machines are getting more and more efficient.
Hmm.
Because hash price corresponds to power price through the efficiency of the machine. So you can basically back calculate, the power revenue based on the chip efficiency. But if you look historically, I mean, like I obviously I'm not going to like speak to all the different events that occurred in this time frame, but you can see that like prior to the present, there was a bit of a hash price floor at around like 60 to 70 cents or sorry, $60 to $70 per petahash. And over that time period, there's a lot of new model machines on the market that are more efficient. So you could pretty much expect, like if we were to say, like if I was a trader, which I'm not really, If I was to say that was the price floor for hash price, like 60 cents, like say those two little bottom dips in 2022 and 2023, well, I would say there's a new price floor now, somewhere around where we're at today, which is like $50 per petahash. And it might even go lower because I know there's a lot of miners, even my own company, we have some miners running borderline efficient right now, and we need to kick them off the network and put something better in as time goes on.
Gotcha. Okay. So kicking older, unprofitable miners off the network, bringing new ones on. When, at what level does Bitcoin's price need to go in order for things to get hairy for miners at this point? It seems like there's an extremely healthy margin right now, at least to my view. I'm not involved in the industry, but from what you're seeing with where machines are, with where Bitcoin's actual price is, how much of a kind of a margin do you think that we have before things start to get hairy and maybe miners have to shut off more of their operations than they like to, or God forbid, begin selling Bitcoin in order to keep the lights on?
Yeah, I mean, every miner's different. It's going to be based on their operating cost. That's not just their power cost, but they're all in, cost of doing business. Um, like, so I mean, I follow some of the like the pubco Bitcoin mining pubco analysts on social media like Twitter. I haven't done a deep dive. Some of them are indicating that some of the big mining pubcos are basically running at a loss at current prices with their current gen hardware. I have no idea what the background of that is. I think a lot of it, from what I gathered, has to do is when you account for the depreciation of the machines. When you actually include depreciation as a cost of operating, which you should, then yeah, I think a lot of miners are actually running at a loss right now. They might be sort of cash flow positive because say they assume their power price is, or the power cost and their operating costs, like for their staff and the like, is like 5 cents per kilowatt hour. They might be having machines that are grossing higher than that, but when you add depreciation to the mix, I think a lot of Bitcoin miners are pretty much in the running under, basically at a level where they can't refinance and continue to scale. It's hard to say though. I don't really know. We're going to find out by how the network difficulty reacts. So if the Bitcoin price stays flat and nothing else changes, like the fees stay flat, we're going to see over time the most inefficient miners shake out. That might just be some people upgrading their own fleet. That might literally be bankruptcies. We'll never really know. We're only going to see the network difficulty change. And the network difficulty has been holding pretty flat. There was an indication it was dropping there when the hash price crashed, but it's actually been holding pretty flat. So I think we're trending towards a small difficulty adjustment downwards for the next difficulty adjustment. But overall, it appears to be trending pretty flat. So it's very exciting to see how it plays out, because I've said this in other, posts that if over time, if we're seeing how how the network's responding, like if we're seeing that the hash price has hit a floor and anything less than that, people are shedding load off the network, they're dropping hash rate, then as an investor, anyone investing in mining companies can then say, well, with confidence that they know where the break-even point of the network is, and if they can invest in anyone, any miner that has a better break-even point, they know they're going to have a good investment. So I'm really interested in seeing how it plays out over the next few months, just to see where the hash price sort of settles out at, because running my business, that's going to indicate to me if I should be like investing more on like self-mining projects or the other stuff we do at Upstream Data, like engine machining or, the other adjacent business arms we have.
I'll actually go ahead and share my screen here. I have a chart that I think you might be interested in. It's something I was looking at. I posted this to Twitter, and then I also posted it to LinkedIn, which I don't usually do, but I find it interesting enough for that audience to get it too. It's Bitcoin miners versus gold miners as a percentage increase since Bitcoin's 2022 bottom. And obviously lately it's been faltering a little bit, but I think this is the only industry where you have a pre-programmed event where you know your supply schedule is going to get reduced, but you see a plus 200% increase in the price of the public companies that are mining that commodity. When you see this chart, what does it make you think with the evolving sort of capital investment landscape in commodity?
I know that the market seems to reward. It seems to me that and I think a lot of people would agree that Bitcoin miners on the market, like publicly traded companies, they pretty much trade at higher volatility than Bitcoin. So if Bitcoin is trending up, miners will trend up, but at a larger like percent gain. At least that's what we saw sort of mostly in the last cycle. And the same thing, if Bitcoin's crashing down, the miner stocks were plummeting much more on a percent basis than the commodity price. So, even like it's funny because with the halving here, a lot of these miners aren't looking the best as a general investment. I don't know how they would compare to your standard gold company, like on earnings per share, like on the normal things a shareholder might be interested in. Um, but it's surprising because after the halving, mining pubcos haven't really dropped as much as you think they would because of the revenues getting mostly cut in half. Um, so I guess like the market had that priced in or whatever you would say to that.
Hmm.
But I guess we'll find out over time as like we see more and more results coming out of these pubcos like post halving, like what their businesses look like. And so far, I don't think anyone's reported on that. That'll probably be another couple months till their next quarterly report, and we'll see then if the public if that shocks the public or if that was already expected or not. But yeah, I'm generally bullish on Bitcoin. Some Bitcoin mining pubcos I like a lot. I'm bullish on them. Some I don't. I don't think they're doing it for the right reasons. I won't name anybody. But I'm very bullish on the industry. Um, my business is 100% committed to that. So I like the chart generally, I guess. Every mining pubco seems to have a similar but varying strategy. Some of them are like pivoting towards like AI, high performance computing, like adding that to their portfolio. Others are like getting more into infrastructure, like sort of like our business. Like I seen that at a Marathon Digital. They're doing more software, pool stuff, even hardware stuff with their two-phase immersion. So I mean, everyone's sort of got their own skew and how they're adapting their business over time. Um, so I would see them as a proxy or a beta to the general Bitcoin market, but it's hard to say because Bitcoin market can be really strong or hold flat or even go up, but it doesn't necessarily mean that Bitcoin mining will do the same. So
Got it. Excellent. What is your view over the next couple of months? You did a little thread on this where you kind of talked about what's going on and how you view things. Um, Over the next several months, where do you think Bitcoin mining is headed? Where do you think hardware prices are going? Let's say if we're in for like a totally flat 2024 and 2025, right? We don't go down because it's an election year and the Fed has its finger on the stimulus trigger, but we don't go massively up because now consumers are running out of money, less excess savings to spend on things like Bitcoin. What are the implications if we just stay completely flat for mining, hardware prices, all of it?
yeah, at least for the pure mining market, I would guess we'll see some consolidation. Um, we've seen it a little bit, right? Like you're seeing announcements like CleanSpark just announced. Now, this one I think had something to do with some political stuff, like with I don't know if you saw in the news, like that Wyoming facility, like
Mhm.
in Arkansas, and there's some politics against, say, Chinese miners in America that's been coming out. So I don't know how much that affected, say, this like CleanSpark just took over this site in Wyoming, I think I was reading. But anyway, like I think you'll see more consolidation. Like you'll see some of the big cash, the big miners that have cash look to eat up some of the smaller guys that have great facilities or great PPAs or similar, like stuff that is synergistic with their own growth strategy. I would expect to see that. There's some of these pubco miners don't look to be doing that healthy on a financial level. Maybe they end up getting sold to, the bigger fish. Um, Hopefully the Bitcoin price just rips and no one needs to worry about any of that. But for hardware, I don't know. I'm expecting hardware. Like I generally, my team, we don't really advise the customers to buy new. Generally, we usually suggest they buy second gen if they can, because generally, if you can buy second gen, that's a good indication that you have a healthy business for mining, with other reasons. But I do expect hardware prices to sort of like keep flat and drop hopefully over time. They tend to drop slower than they rise, when the market goes the other way. But the manufacturers they keep pumping out machines, and if the market stays a little flat, like you were suggesting, I would only imagine that their profit margins on machines are going to shrink, and their prices are going to stay low for quite a while.
Excellent. So with that in mind, I kind of want to shift into a little bit more about what Upstream does specifically, because I think you've built a very interesting company, and certainly a lot of what you do I don't yet understand. And so, not just me asking these questions for the viewer, but for myself, you guys build load centers. You guys help with natural gas power generation. I'm on your website now. I'm scrolling through. What are the kind of companies that you work with, and what can you offer them?
Broadly, we just work with energy companies, primarily oil and gas. Um, but our customer base, the funny thing is we have so many different products that we've developed for the Bitcoin mining market. We actually have a very broad customer base. Like we still have a lot of these small miners that buy small Bitcoin mines from us, like our bigger black boxes and the like, and they just connect them to their local. They might be on a solar farm, they might be at a greenhouse. Someone just did that at the end of last year, is connected their black box to a greenhouse. Primarily, though, our focus and my personal focus at the company is mostly oil and gas still. We are building Bitcoin mines, containers, load centers for the grid, and we still do that. But my personal focus is still mostly developing our oil and gas side. So we have, like, for example, we have that hash generator product, which is an integrated natural gas genset with a Bitcoin mine all in one package. So basically, it's a solution for oil companies that have gas they can't get to market. So it could be an emissions reduction application. It could just be a stranded gas application. And they might buy that product from us or rent it from us. There's different options we have. And the main thing you'll see out of us really in the near term, I think I'm pretty satisfied, I guess, on our product development. You're going to see a lot more software out of us on product development, and you're going to see more U.S. operations out of us. I've been hiring people in the U.S. to slowly get the stage set for a lot more actual physical business in the U.S., not so much just exports, but actual physical support behind the product.
Very cool. So for dummies, I suppose, for me, how on earth, if you could describe the process of capturing vented or flared gas and then, making it into this usable energy that you can use to mine Bitcoin? Like if you were to break it down for an infant, what does that process look like?
For an infant, okay. Well, I have a 2-year-old, so I should be I should be good at this. Um, Basically, you know, the problem that we're solving is oil and gas companies have excess gas. It's like opening a can of Coke and all this foam comes up. That's literally what happens in an oil well. It actually foams, and it even foams. So it's coming out of solution just like carbon dioxide out of Pepsi, and they have to get rid of it. And so they want to sell it to the market. If they can't sell it to the market, they burn it in a flare. That's because it's the safest way to dispose of it and the most environmentally friendly way to dispose of it. So we just say to them, instead of doing that, you can't get a pipeline in the ground to sell it to the market. It's too expensive. Okay, buy or rent a generator from us. So it's just an engine fueled by that gas. So it's just fueled by that natural gas that they can't get to market. And that engine just churns away, fueled by that gas, generating electricity and powering the Bitcoin mine. That's it. It's connected to the internet. And then we have like fancy control systems for load control, keeping the engine healthy, monitoring, and basically fleet-wide management. We call that our load sync controller. But we basically it's just applying a Bitcoin mine to a stranded source of energy that can't get to market, and then getting it to market by turning it into Bitcoin. It's that simple. So at least they're getting paid for the energy.
Hmm.
And if it's the mineral owner, like if they own the royalties and, the operators on their site, they're getting paid a royalty on that gas instead of nothing if it's flared. So it's basically a win-win for everyone. On a properly executed project, it's a win-win for everybody. Everyone makes incremental money. It's not a get-rich-quick thing. It does take time it's a lot of capital that goes into these pieces of equipment. So it takes time to pay out, but it's good for the environment, lower emissions. It's good for the resource. We're not wasting it. It's good for the mineral owner. They're generating a royalty. It's good for the producer. They're making incremental money on volumes they're not destroying, and they get to report less volumes destroyed, which looks good publicly for them. So yeah, that's I don't know if I've explained it for an infant, but it's basically that.
Pretty good explanation. Pretty good explanation. Not infant, maybe toddler. But wonderful either way. Perfect explanation. I think I'm going to
I'll
take
work
this.
on my infant version.
Perfect. Just in case you ever have an infant owner of a business that has flared gas you need to get rid of. Are there any
that
interesting
that
examples
needs to
that
make these big decisions.
exactly right? A capital allocator. That's two. Um, are there any different interesting examples that come to mind of the companies that you've worked with that have had kind of because obviously like you're working with so many different kinds of firms that have all this different these different circumstances, I guess. Have any stuck
Yeah.
out in your mind as particularly like interesting or weird or challenging?
Well, man, we've worked with a lot of different companies, a lot of small mom and pop oil companies, a lot of bigger ones, and then even more third parties that do their own contracting with such companies. Because in the end, we're really when you look at us, if anything, we're like an R&D manufacturing and supplier as a service business, more than we are like a self-mining Bitcoin business. But I mean, I'd have a million stories from different cool applications of our product. The oil field ones that I like the most, that I'm excited about the most, are ones where they use the product to capture vent gas, because vent gas is tricky. It's usually smaller volume than what you're normally flaring. It can be venting off tank farms, like low pressure tanks, which is a challenge to capture. So applications like that are always fascinating. Anytime we really promote applying our product on existing engines. So if you have an engine, say, running your facility, could be, let's just, a rental genset. You're renting a genset to power your facility. You have extra power in your generator. You have extra gas that can feed the generator. You add a Bitcoin load to that generator because you already have the sunk cost in it, and make money off gas you're otherwise wasting. I love those applications because they sort of touch everything we do. They touch our fancy control system to basically synchronize the load with the generators. They're utilizing infrastructure they have, the gas, the power generation better. They're optimizing it. So it's stuff like that that excites me about what we do. And of course, like applying it to flare gas is great. I just consider that like run of the mill. Like you're just it's sort of simple compared to some of these other projects. So I like seeing the application of our product in these more niche but extremely useful projects optimizing these locations.
Awesome. You guys are doing cool stuff. Really cool stuff. Well done. One of the tweets that you put out earlier this month, 17 days ago, you said that it would take full network hash rate over 600 days nonstop without anyone else mining on the chain tip to rewrite the entire Bitcoin blockchain. To put this in
Yeah.
perspective, it would take up the entirety of the Three Gorges Dam, approximately 2 years of nonstop power generation. So you'd literally need to harness the world's largest rivers to change Bitcoin against the market's will. So talk about Bitcoin security, because one of the biggest things that I hear is that well, what makes it irreversible? What makes Bitcoin immutable, right? So talk a little bit about Bitcoin security in this tweet here, I guess.
Yeah, Bitcoin security is one of the most fascinating topics related to Bitcoin, honestly, because if you are a Bitcoiner or you're investing in Bitcoin or you're investing in a business around Bitcoin, it should be interesting to you because if it turned out that the system wasn't secure, your investment will go poof pretty quick, right?
Mhm.
So I've always been fascinated by the topic. That tweet, call that a clickbait tweet mainly because like an engagement tweet.
Mhm.
It's true what I said. Basically, what I was saying there is that if you were to just call it attack Bitcoin in the most probably well, it's called a 51% attack. It's basically take control of the network hash rate or take the majority control of it and use that hash rate against the best interest of the network, which would be the most devastating thing you could do if you had all the network hash rate or the majority is to rewrite the chain through history because you're taking old transactions that were confirming on top of each other and you're rewriting them to an earlier date. And so people that transacted in Bitcoin, like if that happened today and me and you were doing a transaction here today, but in a few days they erased history, you might have sold me that block clock there in your background and I would have received it, you would have received my Bitcoins, but all of a sudden that's rewritten and now you don't have my Bitcoins anymore. It's effectively like uh, an unintentional double spend on my regard. But that's what you can do if you were to force that kind of thing to happen through energy or hash rate. Now we're this is where it gets a little, Bitcoin security is a lot more than just, you know, uh, worrying about people taking control of energy and using it against the network, because, if all the hash power is in, say, Ant Pool's Bitmain's power, within they own all the machines, which they basically own most of them. Like if you look at the network hash rate, like arguably they own or they have significant influence on up to 47 and beyond percent of the network. It's not really Ant Pool or Bitmain that I would worry about. It's more so like the government that controls them. China could force Bitmain and Ant Pool to use their hash power against, call it the will of the network, censoring participants on the network, blocking other miners from getting blocks by overwriting their blocks. There's different ways that you can attack Bitcoin. So the whole concept of Bitcoin security is definitely very nuanced. But as for that tweet, um, it was just to give a picture of like how incredibly secure it is, and especially historical transactions are, and how much power you would have to physically harness if you were going to do it in the most like call it blunt force trauma way possible, and that's just going after the network based on a 51% attack.
Right. Excellent. And kind of going off of that, I suppose, uh, with that in mind, it's becoming harder and harder and more expensive every 10 minutes. Every 10 minutes in order for something like this to ever happen. Right? Sort of that's kind of all of Bitcoin's properties at the network level. The longer you wait, the more this thing continues, the more nodes there are on the network, the more miners log onto the network, the harder it is to ever change anything about this thing, the monetary policy or the transactions that have been confirmed. Excuse me. And I guess in the monetary policy front, we spoke about transactions. We got another tweet on May 6th. Again, kind of another, joking, lighthearted tweet that said miners have no control over Bitcoin. But then in the exact same breath, the following breath, they say, miners, can you please enforce my soft fork? So talk a little bit about, miners say in what how Bitcoin forks, and why they have so much say. Because I think this is a misunderstood thing as well. One of the questions I always receive, you're probably in your circles colloquially the Bitcoin guy. I'm colloquially the Bitcoin guy in my circles, and people always say, "Well, why can't they just make another one?" Um, or why can't someone, take Bitcoin and do X or Y or Z? So, talk a little bit about miner control over like what gets forked into Bitcoin, or how Bitcoin forks.
Yeah, and this is where I'm gonna butcher something, I'm sure. But that tweet in particular, I was making fun of. So, like, obviously, with the history of Bitcoin, and call it the block size war, ended with this idea that users control Bitcoin, which I'm not arguing with really. I always say the market controls Bitcoin because people have different definitions of what a user is, because a lot of people call a user like someone runs a node and they ignore miners. Well, miners are also part of the market. They're also users. But so really what I was joking about is like the last few upgrades to Bitcoin, like Taproot, prior to that SegWit, and then there's I think another one in between there somewhere. In terms of soft fork upgrades, it's actually miners who enforce soft fork upgrades. And then I was sort of making fun of how, the same people that always championed, users control Bitcoin, the market controls Bitcoin, miners have no power. Meanwhile, they're pushing for upgrade mechanisms that are basically dictated by miners. Miners choose to enforce them or not. And given the state of centralization that continues in mining, where basically Antpool and its proxies, i.e. the different pools and partners they have that are basically just underwritten by Antpool and Bitmain and their partners. If you combine Antpool and all their proxies with, say, Foundry Digital and whatever proxies they might have going on or different mutual business interests, they together control the majority of Bitcoin hash rate. So the joke really was, well, the people saying that users control Bitcoin, the market controls Bitcoin, please upgrade my soft fork, Mr. Miner. All you have to do, you don't have to campaign to me or you, Joe, or any of your listeners on upgrading Bitcoin. You literally just have to convince, I think his name is Mike Rizan out of Bitmain, and Barry Silbert out of the guys funding Foundry. And two people can upgrade Bitcoin with any soft fork you choose. All they have to do is say yes and tell their pools to enforce it. So that was the joke. And I'm sure a lot of people didn't get it. It's probably a bad joke, but that is that was why I made that tweet. And it's sort of making fun of the people that think miners have no control and yet are begging miners to run their code.
Yeah, no, it seems to always be the case. Seems to always be the case, but at the end of the day, it all falls into the miners' hands because they're the ones who are, upholding the network at the end of the day. I want to shift gears a little bit as we close out here, to kind of the more broader, like why Bitcoin question. One thing that you said, you talked about a carbon accounting system. I don't know if this is something that's happening in Canada already. I've heard rumblings about it. I'm certainly not the most informed on it. I know that in Canada, there are a lot of more totalitarian policies than there are in the United States. And so, is there a carbon accounting system that exists right now in Canada?
There is. So yeah, are you referring to something I commented on carbon accounting being the social credit
Yeah.
scoring system of the West?
Hmm.
Yeah. Yeah, so I mean, obviously depends on who you ask. Like a lot of people don't like the carbon accounting system generally, but a lot of people like it. A lot of people think it's something that actually helps the environment. I'm not going to debate that right now. I'm of the mind it's a complete net negative on the environment, but we can argue that some other time. But more or less, Canada does have a carbon accounting system in place. And what is absolutely disgusting about the whole thing is I'm seeing how this system, which is, it's effectively, the way I look at it, it's another layer of, it's like instead of a business running itself based on financials, like money coming in, money going out, who you owe, and all this stuff. Now you have this new accounting system you also have to answer to, which is your carbon footprint. And one example of how it's manipulating companies and their decision making. And you can argue whether it's good or bad, it's one thing, but it's manipulating how companies are behaving in this country. Say like an oil company who are of course generally targeted for ESG reporting and carbon accounting because of the nature of their business. They cannot get access to funds if they don't paint a rosy picture on their carbon accounting scores and their ESG scores. And they have to make all these decisions that are not in the best interest of their business or their shareholders just to improve this arbitrary new accounting model that's constantly changing, by the way, the rules and measures on how the bean counters are basically enforcing it. And so companies now have to navigate this whole new accounting system in order to get access to capital. A lot of these bigger banks and bigger institutions that offer credit to these big companies, and again, I'm speaking out of my experience. I can't speak to other industries, but other industries are very similar. My experience is in oil field, and a lot of these oil field companies, they cannot get access to additional credit to continue to finance their business unless they get approval from the creditors that they're in a good ESG spot or a
And
good
that's
carbon
particularly dangerous
accounting
because
spot.
energy is life, and dense, immediately transferable energy is what is the bedrock of human flourishing. So if these companies that enable that and enable cheap energy prices, if they can't get access to capital, that sounds pretty bad.
Yeah, and I mean, and it really, I'm speaking on the oil field side, but it's happening, I think, at pretty much any large corporation. If they don't, that's why you see them all march into the same beat on the ESG scoring and all this, because a lot of the same creditors are financing a lot of these big corporations. And, I would say that in a free market, so be it, let them do that. But we're not in a free market. These companies exist off securing cheap money from the money printing spigot, the mechanism. So they're sort of in a positions of power to distribute this money throughout the economy, and they're dictating that we have this new accounting system that never existed in the past. That's not refined. That's very discriminatory. That's full of gaps. It's very opaque. It's hard to understand. It's hard for smaller businesses to navigate. It's costly to navigate. It's friction, and all these things are, they might be well intended, but the road to hell is paved in good intentions, as they say. And I think this is one of just another factor that I don't know if here in the West we're going to get like the China style social credit scores. I think that's way too distasteful for our culture, but we sort of already have it in this system. It's just like it's just tricking people into thinking it's all about the environment, but it still effectively ends up controlling these companies from a social layer. So it is a social credit system, and of course these companies have complete control over their employees and how they behave and their motivations as well. So it just trickles down to everybody.
Got it. And so I guess the last thing we'll wrap up with here is then the why Bitcoin question. And I like getting people's opinions on this. You're in an industry that is highly competitive. Um, for individuals, for companies, what is your go-to sort of response when people ask you why Bitcoin? Why are you working in this? Why are you so invested in this? And why should I take an interest in this?
Yeah, I sort of always answer this question the same in that I don't like to tell someone or suggest to someone why they should be interested. done that and I've tried that, and I find that it doesn't work because everyone has completely different outlooks and views on the world. So I basically, my response is, why do I like Bitcoin? I hate, I really just despise I think the system we're in is thoroughly corrupt on how money is produced. I'm not really worried about the other things a lot of people are worried about. I don't like the fact that how high taxes are and everything, and how badly the government spends their money and all this deficit spending. But I think all that gets resolved when we fix the source, the root cause of all these problems, which I believe are how money is created and issued. And all I personally want is to see more fairness in how money is created and issued. I think so. Why Bitcoin? I think Bitcoin is the most fair and competitively distributed way to create and produce money. Uh, Even like gold would be number two in my mind on how that's done. The competitive process for gold mining. Bitcoin mining is just even more accessible to people. Like anyone can mine Bitcoin. Not anyone can go out and mine gold. So that's the way I look at it. I'm interested in Bitcoin because I think it brings fairness to the system of how money is created and issued. And then I think everything else, like all the other major problems that me and you have personally, and that are put upon us by our environment, by the society and world around us, I think that slowly gets resolved. Like once we resolve the issuance of money. And so I just happen to be interested in that, and then I'm looking for opportunities to be a contributor in this little economy we call the Bitcoin economy, and the products I develop are how I manifest that in the real world.
Wonderful answer. Steve, thanks so much for coming on. Really good to get some FaceTime with you. Where can people, where do you want to send people?
Yeah, it's been a while since I did podcasts actually. I got two little kids now, so it's been hard. Um, yeah, you can find me on. I mean, I'm tweeting all the time, so Twitter, I guess, at SG Barbour. And then from a business standpoint, upstreamdata.com.
Excellent. I'd highly suggest you go give Steve a follow. He's always great. Always make sure that you're following not just people who talk about Bitcoin's price, but the actual network itself, because there wouldn't be a market price if not for the people that are actually on the ground getting these operations running and expanding it. So I salute you, Steve. Thanks so much for coming on. And of course, everyone, make sure that you go check out Theya, the world's simplest Bitcoin self-custody solution, theya.us, or just search Theya, Theya, on the App Store.